Hello and welcome to Analyst Hangout. I am Perpetua Fasomi Peter. Well, it's Friday, the 30th of December 2022, and you know what that means. It is the last Analyst Hangout for the year 2022. I'm not alone as always. I have Ambrose Omodio, the Chief Research Officer at Investigator Consulting. He's right here with me in the studio. Good to have you join us today.
Thanks again, Perpetua.
It's always a pleasure having you.
Yeah, thank you.
All right, we also have joining us virtually Kasimu Garuba Kufi, the MD CEO, APT Securities and Exchange. Thank you for joining us, sir.
I'm happy to be with you.
All right, and joining us also virtually is Oladipo Ajayi, the head fixed income, Chapel Hill, Denham. Thank you for joining us, Oladipo. All right, we'll begin with the stock market report, and of course we're looking at 2022 in retrospect. The Nigerian stock market has closed 2022 on a positive note, having sustained an uptrend throughout December. And then the Nigerian stock market, which is the Nigerian exchange, closed 2022 on a positive note. The exchange, which opened the year at 22.296 trillion naira in market capitalization and 42,716.14 in the index, closed the year at 27.915 trillion naira and 51,251.06 in the index point, respectively. During the year, some remarkable events shaped the market, and some of these remarkable incidences include the listing of Boa Foods, Girigu Power, the launch of the revised capital market plan, and SEC's approval of NGX Technology Board listing rules, among others. Well, that's the story, and like I said, I have Ambrose right here with me. So Ambrose, I'd like you to talk to us about the performance of the local bonds during the course of the year, and of course we saw the 19.65 year-to-date gain. Talk to us about that.
Actually, I would say it's a good market for 2022, and investors in Nigeria are smiling. Our market being one of the most attractive market or the best performing markets for the year 2022 as at the close of business today. The good thing is that we had a mixed trend in the market. The market started strong in the month of January, say up to May, before market starts slowing down. And we say, what are the factors behind that? January to May, tell you that because of one, we're having a low interest rate as well as low yield in the fixed income market. Then companies on the exchange, as usual, extended their impressive performance from the 2021 to 2022, and that trend continued in their first quarter, which also reflected in the full year period for these companies. That also supported the market around that May when the first adjustment came, and it's not surprising because we saw that when the war in Ukraine and Russia started in February, we started seeing the impact. That changed the whole global economic trend. We saw geopolitical tension affecting supply side, and that was all distortion in oil and all those stuff, commodity. We saw inflation hitting 40 years high, 30 years high in different domains. But here we saw that in Nigeria we are not left behind because we are not isolated. That trend continued. But the first adjustment in rate that was done around May, and around 24 May this year. After CBN governor or government or what is it called, the
Monetary Policy Committee
joined the global trend. They had the rate with the
and there were debates around, is that what we're supposed to do? Is it that we're just copying?
Yes. We saw that first 150 basic points hike. That changed the face of the market. The month of May, and also the PFEs, who are the smart money, also slowed down because with the rate hike, automatically the fixed income market become attractive. You start coming, and that trend continued to over the month of November. But market only corrected for almost 5 months. But the good thing is that even when market is coming down, earnings that were coming were also good for third quarter. But when market comes to a level, the last adjustment, market said no, because the yield has become attractive. Was also we are entering end of the year, seasonality, which is the last quarter of the year. If you look at our market, our last quarter has always been impressive. Go and check the trend in the market. We have seen the market making like 3 years consistent gain. From 2020, 21, 22 now, which is good. Also, look at the trend. Every quarter, the last quarter has already been beautiful for the market. That also changed the trend because seasonality is just about repeating the trend that before. And if you know that as an investor, once we're entering the month of November, you see investors, sentiment started changing, looking at those companies that has good dividend yield, and also we're in an inflationary environment. You need to hedge against inflation. Most of these fixed income market, they are far below what inflation is. That means they are already in deep red position. Whether for that, people are adjusting their portfolio gradually, seeing that those companies are performing well. We have seen their Q3 number, give an insight what we'll see, and at the end of the year, people start also reporting their portfolio. We saw that trend that also Today, we're not surprised see the market also crossing, the 51,000 mark again. Tell you that the life of those high capital that supply the market are still intact. Most of them are still low. That means the market touching for 54 before, now coming down. This possibly are going to surpass it at the entry into the new year, especially as this volatility continuing in the month of January. I expect that market might likely because ETH have not moved. It just only gained 10% today. We have not seen Dangote cement going up. Also, BUA will still do that. MTN will still do that. No, Nestle just coming back from below 1,000 around this level. And I believe that market is very, very impressive. But one thing is very key. Investors should not be carried away with this uptrend. Once you hit your target, take your profit. Those that want to enter a new position, market correct a little, or those companies that have gone up, people are selling. What saw happen in GTB yesterday, that trend continued today. If it reverse next week, fine, but as you pull back, it become attractive for GTB. Also, we saw all the banks corrected today. Then that people took profit in them. That means people are likely to also jump in by next week to see another opportunity. That means as an investor, keep your eyes on those stocks that is correcting, that will have potential to pay good dividend and also have upside potential from terms of capital position. That's where it should be. But for me, our market has really done well, beat all other investment window, make Nigeria market become one of the best market in the world. For me, it's a good one. I think we should learn today that as an investor, you know how to work to diversify your portfolio. You can share your money to have 50% in equity, 40% in what in fixed income, or the other way 40. But those are balance your portfolio. Don't just looking at one because you are what you call risk averse and all those stuff. So that at the end of the day, you can support to the bank.
All right. When you say talk about correcting, some persons may be wondering what you actually mean by that.
No, if you are doing 60-40 portfolio arrangement, you can still move with that. Now it's 40 because some people want to go into equity market. They want to put all their money in the fixed income market because the risk there is low. Now that we are seeing that there's opportunity, you can also adjust your capital. You should order to 40-60. Keep your 40% in the capital equity market and keep your 60 because for those like us, we won't do fixed income market. We'll still play, the equity market with all our fun. All right.
Well, we have seen the local bourse, withstand several shocks, especially in the last quarter of the year. I'd like you to speak to this, Mr. Oladipo. If you can hear me, Oladipo, I'd like you to speak to this, irrespective of all the shocks and all. We saw that the market was still able to stand. All right, I guess we have connection issue. Okay. I guess, Casimo, if you can hear me, Mr. Kofi. Mr. Kofi, can you hear me? If you can hear me, I'd like you to speak to this. All right. I guess we're having connection issues today. So let's have your thought.
Actually, for me, I said it, the volatility in the market always creates opportunity for investor. Despite the ups and downs you just mentioned, we saw, rate hike. Despite also, insecurity here and there. We saw hike, in the cost of production. All this, but some companies still survive. And also, the good thing again is that most Nigerian investors are becoming resident. For me, they are becoming savvy in terms of knowledge. For that, they know when to be in stock and when not to be in stock, and that will continue to flow like because I say circular flow of fund is very, very important. You need to tell you where to be and also where's your opportunity in the market. You know how to take advantage of it. The volatility I just said earlier will continue in the new year, especially in the month of January and February. Don't forget that elections are around the corner again. Now that the market has closed on a positive note, this year 2022. That trend recovery will continue, but as an investor, don't be carried because of the uptrend of the market. Know when to take profit and how to invest.
Okay, well, if you can hear me, Mr. Kofi, amidst volatility in stock markets across advanced countries caused by risk assets sell-offs by investors, we saw that the Nigerian stock market, is recording its best performance in 2 years. Talk to us about this.
Well, actually, the market recorded good performance in the 3 years. It recorded good performance in 2020, 2021, and 2023. That's what makes our market unique. Unique in the sense that for the first time, the market is closing positively during the election. When we are facing the election, most of the time our market goes down. But this time around, the market went up and closed with almost about 20% by all share index, which is one of the best performance. Aside that one, for the first time, we are welcoming the new companies. 2 companies get listed, BUA Food and Grego, and each of them gain 50% within there. If you look at it, BUA is now listed at 40 naira, trading at 65, gaining more than 50%. Grego listed.
All right, I guess that's the network issue. Well, he was talking about Grego, and Grego has really done very well for itself, gaining about 33% in the space of three days. And we also saw that even last week, it also did very well. Talk to us about that.
No, I'm not surprised Gregory is gaining. If you look at the nature...
Did you say you're not surprised? Because I remember you were one of those who said you're not ready to go into that stock. You're waiting for it to...
So, exactly. I'm not surprised that it's gaining. Why I say I'm not surprised that it's gaining is that I'm not there as we speak now.
Well, if you can hear us, Mr. Kofi, you have the floor. Go ahead.
Yes, I said that the market has done wonderfully well.
Yes.
In the sense that it hedged against the inflation by almost gaining about 20%, which is none other financial instrument achieved this. So our capital market proved the prudence that if you invest in the equity market, you will hedge against the inflation. That is one. Two, the two new companies gain, each of them gain 50%, the Gregu and the Boa Food. And what it means that more companies were expecting to be listed in 2023 in view of the development and the achievement made by the just two listed companies. What it means that our market is ready to welcome the new companies, and if they are ready to play the part, the market is ready to reward them abundantly, as we have witnessed for the. The other issue is that still quite a number of our stock are trading below the fair value, which means that there is more room for improvement, especially in the banking sector, in view of the changing of the currency and the promotion of the electronic transfer. We expect banks to do well, especially by next year. So there is more room for the improvement, and we believe that the other oil sectors have not yet reflected the changes that is going in the industry. So we are expecting to see more changes in the next coming year.
All right, thank you so much. Well, very quickly, I'll still like you to talk about Geregu. This is it. Geregu Power actually defied speculations, gaining 33% or 86.75 billion naira in the last 3 trading sessions. That's on the Nigerian exchange. Also, the company stock price rose to 149 naira per share. You heard him talk about a 50% gain. Yes, that's where that comes from. So talk to us about this. I mean, looking at the fact that as of 23rd of December, it was 105 naira, but today 149 naira.
I said it before that if you consider the sector where the company is operating and they will know the opportunity in that sector, which opportunities are, when it comes to power and energy, Nigeria was still dragging feet. And for you to drive any economic development, any economy, you need power and energy, which and for me, that is the sector where they are taking position, and we are seeing the impact now in terms of generating power and other stuff. And don't forget that as they're generating, they are paying them. What we saw in the last third quarter, there was a big slowdown as a result of the hard gas issue. But we believe that now that we are seeing kind of stability after the flood, we expect to see more improvement in that. Not only that, when you are into utility, that your service is what people need. Price can be adjusted anytime, and also because that they need it, it's a regular thing, you're about to make profit. Apart from that, also look at the shareholding structure now. It's gradually changing. We know that these the shares are in few hands now. Majorly the chairman and now we're seeing a foreign bank and coming to buy by 5%, holding that, so that they're also seeing potential in that company. That is one. And I said earlier, since the personality behind this company is known before now, it has also have an impact in the activities. And I said it earlier also again, if you look at the fair price of that stock, like Alaji said, I gained almost 50%. It was listed at around 100 naira, now almost 150. Yes, if you look at it between 100 and 120 fair value, now we also expect that we'd like to see an uptrend if we start seeing a better number compared to what we saw in Q3. That was another thing. And the new one or the news that foreign companies entering, this FD Bank and also is entering, that's also another attraction that we just saw these days. For me, if this trend continues in company, it's a good one. Like I said, this also will attract some companies to come on the exchange because we're seeing value. Now that we're on the way, but the NNPC might likely come to exchange. We need more companies. Now, if we see all these things on the exchange, that also boosts the market. That's why I said there's potential for the market. Like I said earlier, that when we expect to see financial market reform or economic reset anywhere in the world, we expect there's opportunity to be created for design investors. And that will we're going gradually in 2023. That means after the election, because whoever that comes as president will start to reform. And also, with all we are hearing now, that we're likely to see end of fuel subsidy. If that comes, I'll tell you, that will be one of the impacting the economy. Despite in the short term, we might see kind of increase in inflation and all those stuff. It's a matter of time. But let's get it right. Another one on the path that will take us where we are going. I believe that the market has really, but also we want the set to go beyond just introducing new products in the market every year. I think they should also take time to educate the people to come back, because if you look at the number of people that play in the market before the market crash 2008 and so that the number is still very far from what people are. That means people are still holding back to their loss. People are still not. Let's go out to education, bring these people back to the market. We see, now that we're seeing that foreign investors are not playing the market as light as before. Now market is becoming more stable for us. That means we can plan with the market. We should encourage Nigerians to play this market. That is the area I look at it, because now the PFAs that are ready to play the market because they understand the system. That's why we are not panicking because of election. The foreigners would have sold now market start blooming because of the election, because we understand ourselves. You can see that the market is a bit stable. We need more people to participate so that the market will be going to expand and also drive the economic development we're expected to be in Nigeria. All
right. Well, some persons have also said that one of the reasons we're able to, hedge against the whole global economic headwinds and the shocks is because we have more of the local players on the local boards.
Yes. Well, and I love it. That is what let's encourage more people so that they can plan. Actually, stock market is long-term investment. Those who are doing short in it, but you can plan with it. If you are saving, you are buying a good company, and the company is stable, they're doing well, you can plan with it. And more than what you are saying in your savings account, return. Because you are planning, you are investing, that is what to do. But if market goes up and down, you will be discouraged. But if it's stable, even though as you said, for 2020 we saw it again, 2021 we saw it again, we also seen another gain now. That means for straight 3 years we have seen also, and this is likely to continue in 2023. For me, let investors know that if you know how to play market, that's why education also is very, very key. Most of us in the market, or most players in the market, or most investors, they don't understand the market. They need to get education so that they can take advantage of the market at a time. Market can reward you no matter the sector where the market. Either market is in a bull session or a bear session, the hell market will reward you. Understand where to be in the market and also to step out the market.
Glad to know you're still with us. We're turning our attention to the fixed income market now. Oladipo, kindly confirm if you can hear me.
I can hear you.
All right. I'd like you to talk to us about the fixed income market. What were the major events that dominated the year or shaped the year, and the major takeaways from that market?
Well, thank you very much. For this year, 2022, the year started on the great footing. We saw yield on bond around 13% levels on the long end of the curve, and but just 2 months into the year, the crisis started. The Russia-Ukraine crisis started, and also the forward guidance about the Fed increasing rates actually also starts echoing around the market, and as at that time, market now starts pricing in those things into yield in the market. And in the month of March, we saw the first rate hike from Fed for the year 2022. And as a result of that, our Monetary Policy Committee actually took a hit from that in the month of May, and they did a 150 basis point rate hike. And we know very well that yields are highly correlated with the rates in the monetary policy rate, and as a result of that, the yield on the market actually moved aggressively from around that 13% to around 14%, and also we saw continuous rate hike to the month of November. And if you look at the totality of what the MPC have done this year, they've done over 400 basis points this year, and they've been able to take monetary policy rates to 16.5, and that gives you an idea of how much we have done this year. Because when you compare to where we're coming from at the beginning of the year, 11.5. So they did 500 basis points, and that actually impacted bond yield. At a point in time, yield on bond, most especially 15-year bond, actually traded as high as 16.5 in the market. And just like what Malam Kubi said, and also my other analyst in the house, that the fact that the foreign investors are not in the market actually is more like a plus to us, because I understand that if they're actually in the market, would have seen yield touch as high as 20%, because knowing fully well that inflation figure is now not of 20% compared from where we start at 15.6 at the beginning of the year. So it's been more of a very turbulent year in the fixed income space, and more like a volatile year. And And like you all know, the volatile market gives opportunity for people to actually make money. And if you look at the beginning of the year, the 1 year paper, that's 364-day bill, started the year on a single digits, and sometime in the month of October touched as high as 14.84 with effective yield of over 17%, and now closed the year at also a single digit. When you look at the last NCB auction that was conducted on Wednesday, so it gives you an idea of how volatile the market has been this year, and also how much opportunity the market has actually presented on the table for traders and investors to actually take advantage of. And also, if you look away from that, I also look at the Eurobond space as well. At the beginning of the year, we are barely trading. If you look at most Nigeria Eurobond instruments, they are barely trading single digits. So even the short end, like the 2023, 2022, we're trading as low as 4%. But as Fed continued to hike rates, that also impacted that, and we got to a level that some of those instruments were trading as high as 7.5%.
Okay. If you can hear me, I'd like you to go on ahead. Go on with your thoughts.
Yeah, I can hear you. Like I said, football space also put.
All right, I guess we're having connection issues there. Mr. Kofi, I'd like you to take it up from there. Let's have your thoughts on the market. Mr. Kofi, if you can hear me. All right, Ambrose, very quickly, let's have your thoughts.
For the fixed income,
Yes.
the fixed income, I see more promising next year, because recently the National Assembly approved about 1 trillion for the federal government to borrow, and they have no other choice than to come to the market, and the fixed income will pick from there. I expect better and higher yield next year than what we are witnessing now, because they have to borrow, and if they have to borrow, they have to come with the rate that is at least equivalent to MPR or higher than the MPR. The same with the equity market. I see positive return in the next year, because most of the company will declare their year ended December by March, and the dividend will be paid before the end of April. And in view of this, I see another trigger for the capital market. Thank you.